Welcome to our special continuing coverage of Budget 2013. In about an hour from now, the Finance Minister will speak and we will get a sense of whether this is going to be a consolidation budget, a revolutionary budget, a budget that's all about politics, a budget that's about setting the stage for 2014, or just a plain old boring budget. All possibilities, I guess, are very much there. But we are going to have an absolutely dream team with us all through the day to take us through every nuance. Dr. Surjit Bhalla, great to have you with us. Vivek Mehra, Executive Director, Tax and Regulatory Services, PwC. M.K. Venu, Managing Editor of the Financial Express, who's going to be leaving us a short while from now to go off and do the post-budget interview with the Prime Minister. So we will get a sneak preview as to the questions that you're going to be asking him, Venu, in a couple of minutes from now. Dr. Subhashish Gangopadhyay, economist, it's wonderful to have you with us. Dr. Arvind Virmani, former Chief Economic Advisor, Government of India, who's in a sense been there and done that a little earlier. We'll get some inside tips from you as well. And all through the day, a range of the top experts, the top market voices and the top corporates are going to be also joining us to give us their reactions and as well their predictions. But let me just start off with all of you. I gave a list of the possible options. Quick bet. Which of those is it?
Quick bet, it will not be a neutral budget, it will not be a bad budget, it will be a positive budget.
And not a boring budget?
And certainly not a boring budget.
Okay, quick bet.
I think it will be a investor-friendly budget, creating a good investor climate.
Okay, any specific you want to add to that?
Well, which means that he would not fiddle around with taxes,
okay,
create
so no tax
bad for the sentiment, create a good sentiment. Both for corporates, investors, as well as for, I think, the general public.
Okay, so investor friendly.
It will have fiscal consolidation, the main theme, and it will also address, there will be a lot of stops for foreign investors to address the balance of payment situation, current account deficit.
Well, you know, there he is, he's reached the parliament. These are these standard shots we do every budget, you know, the budget papers being unloaded. Now he's there with that briefcase which has the budget. So he is walking into Parliament. He's holding it rather gingerly. So I hope there are no bombs inside it. You know, he's holding it. He's waving. Now very soon he's going to go inside and they're going to take out the papers, and all of us reporters will say, there he is making last-minute changes, though we know perfectly well that he cannot make last-minute changes to the budget. So there he is. Well, the Sensex is up, and it's up rather decently right now, 100 points up. I wonder if the markets know something that we don't. I doubt it, but you know, there's always a possibility. So last minute changes. He's not making last minute changes. I promise you he's not making last minute changes, but if he were, what would he be doing?
No tinkering with taxes. Maybe a little bit of rationalization that still needs to be done in indirect taxes, and has to boost investor confidence.
Has to boost investor confidence. Dr. Virmani?
Well, the solid core is, of course, going to be the fiscal consolidation, but I would look for a little positive surprise on the tax reform and financial sector reform side. Is not a great probability, but perhaps a little surprise on that side.
All right, let me just go across now to Rajat Rajgarhia, Managing Director, Institutional Equities at Motilal Oswal, to get a sense of what it is that the markets are expecting. Sensex up right now, 100. Hi Rajat, great to have you with us. Your sense of what you would really be looking for in this budget?
Hi, good morning. Well, I think there are three things that we are focusing on the budget. First is, of course, I think the deficit numbers have been spelled out very well over the last couple of months. This year, closer to 5.3, next year closer to 4.8. More importantly, what are the specific revenue boosting mechanism that the finance minister will be focusing on in this budget? Now, no one wants higher taxes, but everyone would still want revenues to move up. So I think if there are any specific measures that they introduce in the budget to boost revenues, that will be very keenly watched. Second, what kind of growth or the numbers they are looking on the expenditure front, because the subsidies is something that markets continues to focus on to see the slippages on the deficit. So that would be a very important number, and we think that the subsidy number should be lower next year compared to FY13. And the third, which is more important thing, what are specific capital market measures, because the domestic investment community needs some specific measures to boost the inflows of money into the markets. I think these are the three specific things. Plus we will have several sectoral measures, right from cigarettes to oil and gas, some of the other companies, right? But I think broadly revenue boosting measures, the elimination to reduce the process to reduce subsidies, and the third is capital market measures.
All right, so those are some of the things that you are looking for. Let me jump across to Mr. S.K. Rungta, who's joining us, MD at Vedanta. Great to have you with us on the program as well. Anything that you're really looking to hear from the Finance Minister today?
Well, apart from fiscal consolidation, which has been spelled out in the economic survey as well, I suppose we are looking forward measures for boosting the manufacturing sector, which is also a priority of the government, and boost to the infrastructure sector. Government has already spelled out that we need almost $1 trillion investment in 12th plan, and we are really looking forward to some measures by the Finance Minister to boost the infrastructure investment and general climate for the manufacturing sector.
Right. Mr. Rungta, if I could just ask you, you said fiscal consolidation. Would you have any views on the measures by which that fiscal consolidation comes? Because there is an expectation in some quarters that perhaps expenditure cuts are going to be very clearly there. It's already happening and may continue. If that's the measure by which he gets to fiscal consolidation, would you worry about growth rates?
Yes, certainly that's not the measure we are really looking forward to. It could be a short-term measure for the current financial year to achieve, 5.1% or 5.3% target. But going forward, the measure has to be, broadening of tax base, which has been mentioned in the economic survey also. And I suppose one area of revenue increase could be, garnering of full tax from the service tax, because there is a lot of scope in higher revenues through service taxes.
All right, sir. Asit Kampani,
with the
great
current
to have
rate,
you joining us as well now.
Without increasing the rates.
Okay, without increasing the rates. Well, I'll just come to that. Asit Kampani joining us as well. Asit, any thoughts of what you would really be looking for?
I think there are three important things here. The budget is a balance between the expenditures and revenue, the receipts and the revenues, the savings and the consumptions, and imports and the exports. The current account deficit is determined by imports versus export, and if we try to add something as a duties on the import, which will not allow people to or encourage people to import a lot of things which can be domestically manufactured. If we try and attack the subsidies and the interest burden, which is a non-plan in nature in the government balance sheet, it will definitely allow government to have a more breathing room. So for example, increase in diesel price or increase in fertilizer price and direct transfer of money to the people who can use this will be a great notion. And also the savings and expenditure, it's a consumption. So today there is a lot of consumption which is driving inflation. So if we try to channelize a lot of savings into investments which will get back into the manufacturing, that would be the best way to do it. Now there are few ways one can describe to do it: direct tax, indirect tax, and disinvestments. So in case of direct tax, if one has to increase the exemption limit, for example, to say 5 lakhs, and then allow all the other participants who earn above 5 lakh come into the tax kitty, including agriculture, because then you are treating everybody at par and widening the tax net. If you are doing indirect tax, increase on imported goods or luxury items, which a lot of people can afford it, but will be happy to pay, and try to collect revenues there. And finally, on disinvestments, you need vibrant capital market. And to get vibrant capital market, you need to have proper incentives.
Okay, can I just ask all three of you in Mumbai, one by one, last year's budget was actually remembered not for any of the good that was done, any of the positive measures, anything. It was remembered for one little thing which he put in there in the explanatory memorandum called retrospective tax, and that became what that budget was known for, and GAR, of course. What is the one thing that you're hoping he is not going to do in this budget? Why don't I start off with you, Rajat? One thing you hope he is not going to do.
But I think one thing that we are not looking forward in this budget is any introduction of new tax at the corporate level, because corporates right now need measures to boost their profitability. Anything which comes over and above what they are paying right now will be a burden which corporates will not be able to take.
Okay, Mr. Rungta, one thing you hope he will not do.
Yeah, we are not looking forward to any hike in excise duties, you know, as a revenue earning measure, because already industry is slowing down and industry can't afford any enhancement of excise duties at this stage.
Okay, Asit, one thing you hope he will not do.
I think he has a lot of choice to do. Most important thing is everybody will come up with a wish list that don't do in my sector. But most important part is what he should do, which will definitely vibrate the economy, which will vibrate the capital market, which is the barometer. So I believe the rationalization of STT, introduction of maybe CTT, and also alternate investment funds treated at par with FII and domestic mutual funds as a pass-through vehicle, which will vibrate the economy, which I think he should do. If he doesn't do that, then there could be some issues.
All right, gentlemen, I am going to take a very quick break right now and then come back to the dream team here in Delhi and throw all of that to them and see what are the specific things that they are hoping that he is not going to actually end up doing. We'll be back in just a couple of minutes. Don't go away. Special coverage of Budget 2013, and let me come now to the dream team here in Delhi. I'm going to start with you, MK Venu, because you have to leave us very shortly because you're going to be going off and doing the post-budget interview with the Prime Minister, which is always a highly awaited moment. You'll presumably wait till the budget is actually done before you figure out what questions to ask him, but anything on your agenda already?
Well, I want to, at the outset, just want to ask the Prime Minister how he assesses the economic situation today, this sharp fall in GDP, current account deficit, and what the budget does to address these issues, and also these structural distortions, inflation, which Prime Minister has always talked about. Inflation is the biggest tax on the poor, and how to address these 5% plus current account deficit, unprecedented. India is an outlier on at least inflation, current account deficit, among all emerging markets on the negative side, you know, the last 3 years. I think I would want the economist, Prime Minister's analysis of that. You know.
Okay, Mr. Vermani, anything you'd like to suggest to him, Dr. Vermani?
Well,
to ask the Prime Minister?
In some sense, the Prime Minister will, has also read the economic survey before probably we did. No, I really, the Prime Minister basically has to explain and communicate to a larger audience than perhaps is even here on this TV, and I'm sure he'll try to do that. And the main key point I think he'll give to a broader audience than this one would be on the trade-off between equity and growth, and how they are balancing that, that the budget is equitable while meeting these very big challenges of the current account, etc.
Okay.
Yeah, this thing on equity and growth, what needs to be emphasized, and I think what this government is now beginning to recognize, is without growth you can't have equity. So let's get this very clear, that growth is a necessary condition for doing whatever you want to do, and what we have done is completely mismanaged.
Recently, what I asked Sitaram Yechury, I interviewed him on TV, the left, which always historically focused only on inflation, and I asked him the budget, what should be from the left side bigger focus? He said growth. So I think across the political class, people are worried about
that. That the left always says, if growth is doing badly, they want growth. If growth is doing well, they want equity. Don't take that too seriously.
I wouldn't take it too seriously, but still, it is suggesting that there is nobody, even the left, who says.
I think you guys should be kind today, this morning, to the left. They are winning an election finally. In Tripura,
but Tripura they have always been winning.
right?
Yeah.
But they're winning. So they used to be winning.
It's like India winning on a turning wicket in Mumbai.
It's not quite the same analogy.
Chennai.
It's not quite
You
the
know,
same
where
analogy.
this problem of growth and equity itself comes is our demographics, are the people wanting to get employment. Without growth, they're not going to get employment. That's not going to lead to equity. So I think growth is critical.
And I think that is what will address equity a lot more than tinkering with taxes.
Well, actually, if the left is saying that, then I think the finance minister and the prime minister should grab it and do a lot more actually after the budget. That would be my
It's unfortunate they don't have much power in parliament this time around.
Okay, can I just come from the generals of the, let's just come to some of the specifics as to what we should be looking for. Now, we spent a lot of time in our special show yesterday evening looking at the possibility of a of a tax on the super rich. Now, if he is going to heed the economic survey, then he will not do it, because the economic survey says pretty clearly it's a bad idea. So we'll wait and see whether he's going to defy the economic survey on that. One of the other things that the survey has been hinting at, and which a lot of people have been looking at, is the entire question of gold, which in a sense is lying behind your current account deficit. It's behind a lot of the problems, what actually is happening with gold and you're importing so much. There is a view, Dr. Virmani, let me throw it to you. Some people have said that actually perhaps you should keep gold out of your calculation of the current account deficit, because some would argue it's monetary substitution. You're getting gold in instead of dollars.
Technically, that's completely wrong, because when you import capital goods, which also goes into productive stuff, that comes in the current account. So as far as the current account is concerned, there's no case at all for changing the treatment. That doesn't mean when you look at gold and you look at net assets of the country and things like that, you shouldn't bring that into the discourse.
But would you expect something, Dr. Upadhyay, in this budget to address the question of gold? What's he going to do about it? Okay, he's hiked customs duty by 2 points. That may have helped. What else can you actually do to control this gold problem?
Well, we have this tendency of looking at where the problem lies and then immediately saying, let's do something, right? But that's not the way to solve this problem. If you do not like gold, you have to control inflation. That's the only way you can get it. You're not going to add some more taxes and expect people to reduce gold purchases, your CAD improving because of that. This is not the way the economy is.
You could give people, look, fixing inflation obviously is a long-term concern, but when that's going to happen is anybody's guess. So, anything which you can do in the short term on gold?
See, there could be, as I said, I've been hearing about some special transaction tax on gold. Bad idea, but since there is a certain desperation.
No, but it's a horrible idea. Just because there is desperation.
I know this is being talked about, but how would a transaction tax? There's talk of a transactions tax on gold. There's talk of a transactions tax on commodities. Second, maybe
it won't help. I'm saying it won't help. Therefore, if sense prevails, I think the finance minister will simply put in place a framework which improves growth prospects in markets and makes people return to financial products which are better than gold.
Is that the answer,
one little thing on gold. It's an X event. If you look at gold imports, they have declined radically. The growth rate has declined radically. They're still going up, but they're not going up at the rate. So therefore,
but
this
the
is
absolute numbers.
But Sujit, smuggling. Sujit, you're forgetting smuggling.
That's the reason you have a current account deficit, and that's the reason why if there is a crisis in the economy,
so
therefore, you can't do much about oil, but you might be able to do something about gold.
What? The only thing you can do about gold is growth. If there is growth, people will invest in the Indian growth rather than invest in gold.
Unless
it's a very straightforward calculation.
In the budget, Vivek Rana, would you expect him? There could be some financial instruments that will be seen as gold substitutes. There could be instruments that try and unlock the. Look at the base that we've got in India and gold. Maybe some instrument to help unlock that. Maybe even an amnesty scheme. I've heard that mentioned. There's going to be an amnesty scheme, declare your gold and bring it all out. Any of that?
How does that stop imports?
It doesn't.
But I guess
I'm trying to ask.
It is a balance between smuggling and increasing the customs duty, and that's the balance which. But I fully agree. Make financial instruments better. Financial instruments better, so that investment in there is far more profitable than gold.
So
the gold is going down, people are losing money on it.
Answer yes to you. I think there will be a whole host of financial instruments which will be announced to make it easier to invest in gold in the form of paper, so to say. But I think that's a good thing, because you should develop that market.
Okay.
Can I just come in with a little bit on gold as to why it might have gone up? The conventional argument, on which there's fair amount of merit, it's inflation. Let me try an alternative explanation for why gold imports in India went up, particularly in the last couple of years. And that explanation is as follows. There has been considerable coordination between the nations of the world for, if you will, connecting with each other on tax avoidance. Assume for a moment there's some black money abroad.
Okay.
This is a fair assumption. Now, if you had black money abroad, the best time and the best method for you to get back your money back into India was in the last couple of years.
So that's one of the explanations for it. Rajat, Ashit, let me just quickly throw it to you. Any expectations you have on new instruments in this budget that can perhaps channelize savings and things like that from gold to the stock markets or to equities or to savings in general?
Well, I think first on the gold, we will definitely see some measures, because it's been spoken enough now over the last few months that the budget will see some measures, and somewhere I agree with all the other experts that these small steps of 2% periodical hikes is not going to help solve this problem seriously. You'll have to create other investment instruments, and capital market that we have been speaking about quite regularly now. The finance minister, when he was in Mumbai a few weeks back, also articulated that we need to improve the channelization of savings into equity markets, and whether it is through in making this Rajiv Gandhi equity savings scheme more productive or more positive for investors, providing more breaks for people to invest into equities, because over the last 5 years the domestic flow of savings into equities is almost negative, and a lot of that money has flown into other asset categories like gold or fixed income or real estate. I think the moment you start focusing on growth, equity itself becomes attractive, and that starts also aiding the growth in process, right? So not just one particular step, but overall they will have to boost growth and focus on capital market instruments.
All right, let me get Asit in on that. Asit, what would you do if you were the finance minister to change the way that savings are happening in India, move them more to equities or other productive avenues as opposed to gold?
Okay, let me take the gold first. I think the gold seems to be a right asset which can be monetized, because we need to have a clear system. For example, in 1999 there was a gold deposit scheme, or we can have a sort of a gold bond or a paper trading, with the gold comes back into the deposits and which is then sold back to the jewelers for making jewelry, rather than importing the gold and making the jewelry. The interest rate paid on the deposit of the gold at this point of time is between 1–1.5%, versus right now you are imposing 6% import duty. You can increase that interest rate to 3%, and the person who are borrowing, let them borrow at 4–4.5%. There is a clean spread for the banks or whoever, the ETF or whoever is involved in between, and the paper which has been issued as in the paper form or a demat form can be traded. So if you want to encash at any point of time, you can encash. That's a ripple effect into the economy, generating gold as an asset, as a reserve, and monetizing it and moving it into the country for requirement of various kind of assets and trading. And also, if the trading is there, there's a confidence that gold is getting traded much better. The gold contracts are getting traded, but they're all futures contract, and they don't end up being a monetary contract. The other point is that if the interest rate comes down and the inflation is controlled, naturally the equity instrument will become more vibrant. And today, if you have to put money in deposit at 8–9% and you expect equity to give you 13–14%, that's not very attractive.
All right, Mr. Kampani, some great ideas out there. It's probably too late for the finance minister to put them in case he hasn't already, but we'll get Venu to make those suggestions to the Prime Minister as well in case Venu meets him a little later. Thank you both so much, Rajat and Asit, for joining us. It's been a pleasure to have you with us here on the program. Venu, I know you have to leave us, so before I take a break, let me get some quick thoughts from you before you go off to meet the Prime Minister.
Speak now, forever hold your breath.
No, he's going to be back after he's interviewed the Prime Minister, and we've cut to that. We're going to get him back to dissect Prime Minister's body language.
I got the sense that that this time he is going to be very bold about the things that Finance Minister and he himself they are doing together. And we are seeing a different Prime Minister, just as we are seeing a different Finance Minister. No sort of mealy-mouthed approach to reforms. I think they are going for
If we end up with a boring budget, we're going to blame you after setting up our expectations with that statement.
My contention is that some of the big things they've already done. You know, nobody expected that diesel prices would be hiked over the next.
Well, some of the big things they've done, and some of the big things are actually pending in Parliament. So actually as much as the budget, and we've been saying this for a while, as much as what happens in the budget today, it's the bills that they have to get through the budget session of Parliament that could really decide what's going to happen in the next year. And perhaps that's what we will turn our attention to when we come back in just a
anyway,
couple
I'm hoping
to
see a different Prime Minister as opposed to what one saw in 2011.
Okay. And you are going to be telling him to pass those bills, right?
I don't know. He might throw me out.
But if you ask him that, we'll ask you discreetly what he said to you after record when we come back. We'll put it on air right here on this program. All right, we're going to take a very quick break. We'll be back in just a couple of minutes.